while the high street was quietly bleeding to death. While digital giants systematically dismantled clothing chains, bookshops, and electronics giants, one ancient brick-and-mortar industry didn't just survive. It quietly exploded into a £3 billion commercial monster. The humble British garden centre, on the surface, it looks like a peaceful, innocent Sunday tradition, retired couples strolling past rows of geraniums, families grabbing lunch, the gentle smell of damp soil and coffee bean roast. But behind this cozy, rural facade lies one of the most brilliant, devious, and brutally efficient corporate business models ever engineered. If you think these places make their fortunes selling plants, you've fallen for the greatest illusion in modern retail, because green leaves don't pay for multi-million-pound real estate. Slice of cake margins do. And understanding how this hidden economic engine actually functions unveils a masterclass in strategic survival that every investor should be studying. Look at the brutal reality of selling living inventory. Plants die. They drop leaves, they get diseases, they need daily watering, and if the weather turns cold for 2 consecutive weekends, millions of pounds of inventory rots on the shelves. In standard retail logic, that is an operational nightmare. The waste alone should bankrupt them, so why doesn't it? To figure that out, we have to look at a small, independent nursery in the heart of Yorkshire back in 2018. The owner was losing 40% of his potted inventory every single spring to sudden frost snaps. He was weeks away from closing the gates forever, until he made one radical, strategic pivot. He ripped out half his greenhouse tables and put in a high-end coffee machine and 30 wooden tables within 6 months. His cash flow didn't just stabilize, it surged by 200%. Why? Because he realized the core secret of the modern garden center. Plants are not the business. Plants are simply the bait. When a customer walks into a standard retail store, they are on a mission. They get in, they find the item, they buy it, and they leave. But when someone visits a garden center, their psychological state completely shifts. They enter a relaxed, low-guard mental zone, and that is precisely where the hidden corporate machinery goes to work. First, notice the physical layout. You never, ever see a straight aisle in a modern garden center. The pathways are intentionally winding, forcing you to slow your pace, gently guiding you past high-margin home decor, expensive scented candles, outdoor furniture, and luxury cookware, long before you ever set foot near an actual bag of compost. By the time a customer reaches the plant section, they have already filled their basket with items carrying 60 to 70% gross margins, and then comes the crown jewel of the entire balance sheet, the restaurant, in a normal business. Food service is a secondary convenience in a modern British garden center. Hospitality is the engine of the enterprise. Consider the staggering economics. A slice of Victoria sponge cake and a pot of tea costs less than 80 pence to produce. Yet retails for £8 to £10. That is an astronomical margin, dwarfing anything you could ever make selling a rose bush. The plant gets the customer out of their house. The maze layout fills their basket, but the cafe locks them into a multi-hour dwell time, and every extra minute a customer spends inside that footprint exponentially raises their total basket size. Yet, this brings us to an even deeper strategic puzzle. If this model is so ridiculously profitable, why hasn't Amazon simply crushed it? Why hasn't an e-commerce giant rolled up with lower prices, overnight delivery, and wiped garden centers off the map just like they did to high street fashion? The answer lies in a defensive competitive moat so powerful, it is almost impossible to break. Try shipping a 50-kilogram bag of wet potting soil, or a 6-foot fragile Japanese maple tree, directly to someone's front door via standard courier networks. The logistics economics are an absolute nightmare. The weight-to-value ratio is completely broken for e-commerce. The shipping cost completely destroys the profit margin. Garden centers are structurally un-Amazonable. The physical nature of bulky, heavy, perishable living products shields them from digital disruption. But staying safe from Amazon is only half the battle. The true genius of the large corporate garden center chains lies in how they quietly weaponized British land laws to build an unbeatable real estate monopoly. If you wanted to build a massive, 50,000 square foot retail superstore today, you would face millions in land acquisition costs, commercial tax rates, and ruthless planning battles. But garden centers don't operate on standard commercial land. They operate on protected green belt land. Decades ago, early operators bought up agricultural land on the edges of major towns and cities for pennies on the pound. As local planning authorities restricted any new commercial development on green spaces, these existing garden centers found themselves holding an extraordinary asset. They held the only approved retail footprints on prime land. Surrounded by affluent suburban neighborhoods, it is a legal spatial monopoly. Competitors literally cannot build next to them because the planning laws won't allow it. When private equity firms realized this absolute truth, everything changed. Firms like Terra Firma swept into the sector, acquiring historic brands like Dobby's. They didn't see plant nurseries, they saw massive real estate portfolios sitting on zero competition land banks with built-in high-margin cash flows. They initiated a classic corporate playbook known as the sale-and-leaseback. They sold the underlying land to institutional property funds for billions in immediate cash, leased the site back to the retail operator, and used that giant pile of liquidity to buy up smaller, family-owned independent centers across the nation. The market was systematically consolidated. The sleepy countryside nursery was transformed into a sophisticated, private equity-backed retail monster. Yet, just as this roll-up strategy reached its historical peak, a catastrophic operational vulnerability emerged, one that is currently threatening to tear the whole system apart from the inside. Every giant retail engine relies on a predictable supply chain, and the British garden centre engine has one massive, glaring single point of failure. Holland. Over 70% of the finished ornamental plants sold across Britain pass through the massive automated auction houses of the Netherlands. Millions of plants daily, moving through precise cold chain transport networks across the English Channel. When international border checks intensified and global heating costs spiked, the cost of keeping live plants alive during transport skyrocketed overnight. At the exact same time, the UK government announced a complete phase-out of peat-based compost. Peat moss has been the cheap, reliable foundation of plant growing for over a century. Removing it meant every nursery had to completely reinvent their growing medium using expensive alternatives like coconut coir and bark. Margins were squeezed from both sides. The cost of the bait, the very plants that bring customers through the door, began to explode. So, how did the elite operators react? Did they raise plant prices and risk driving away their core demographic? Not a chance. They doubled down on customer psychology. If the cost of living plants rises, you simply expand into non-perishable lifestyle sectors where pricing power is absolute. Walk into a modern top-tier garden center today, and you are looking at a masterclass in demographic capture. They realized their primary customer base, wealthy, retired homeowners, had disposable income, time, and a massive desire for social connection. They didn't just sell them garden tools, they built winter wonderlands by October. Long before traditional retailers even think about the holidays, garden centers transform their massive footprints into immersive Christmas markets. They turn a dead winter season when nobody is buying plants into their highest grossing quarter of the entire year. They sell luxury artificial trees, premium lights, imported ornaments, and breakfast experiences with Santa. They eliminated seasonality entirely. They turned a volatile, weather-dependent agricultural retail business into a smooth, 12-month commercial machine. Think about the incredible transformation of this industry. It started as humble growers selling excess stock from dirt plots in the countryside. It evolved into a sophisticated retail format that defeated the digital e-commerce revolution. It leveraged green belt land laws to block out competition. It used private equity engineering to scale nationwide. And it reshaped consumer psychology to turn simple cups of tea into multi-million-pound profit centers. The ultimate lesson of the British garden centre isn't about plants at all. It is a masterclass in business design. It teaches us that the product customer thinks they are buying is rarely the product that generates the real wealth. True corporate power comes from controlling the venue, capturing the customer's time, protecting yourself from digital disruption, and building a business model where every single weakness is secretly hidden behind a wall of high-margin experiences. The next time you pull into a garden center on a sunny afternoon, look past the green leaves and the colorful displays. Look closely at the winding paths, the busy cafes, the specialized concessions, and the vast real estate footprint. You aren't just standing in a garden center. You are standing inside one of the most brilliant, unseen economic engines ever built.